Welcome back to another episode of the Beginner Day Trading YouTube channel. I appreciate you guys for being here. Please hit that thumbs up so we can continue to grow the channel. So today we're going to be talking about mastering stock charts, a beginner's guide to technical analysis. Now, this is going to be very important when it comes to your trading future. So if you want to be a master trader, you're going to have to learn the basics of charting. And so the platform we're going to be using today is called WeBull. WeBull is one of the simplest platforms you can use as it pertains to charting. It's nice and easy. You can easily buy and sell and do many other things. Now, if you want up to 20 free stocks, please click the WeBull link in the description below, and we both will obtain some free shares of stock. I appreciate you. Now, in today's lesson, we are going to be covering a lot that is going to get you in the direction you want to go for your stock trading career. Okay. Now, we're going to be using this chart. So we'll be going back and forth between the chart and the curriculum that I have for you guys. So please just be patient as you get to learn everything step by step. You're going to need to know everything in this curriculum. Okay. So, first things first is introduction to stock charts. So stock charts are graphical representations of a stock's price movement over time, which I'm sure you guys pretty much know that. Now it's used by traders and investors to analyze past performance and predict future price movements. Very important, right? So when we talk about past performance, you can see earlier today, this particular stock at one point was $559.19. And then you can see it got as high as about $563. So this kind of tells us the history of what's going on with this particular stock. And by the way, we have an ETF that tracks the S&P 500. So the top 500 companies in the America is the S&P 500. Now, this particular ETF, also known as an exchange traded fund that we're going to be utilizing, is called the SPY. Okay. It's the ticker symbol SPY. And you'll come to find that a lot of traders use SPY. Now, you can also buy the SPY as if you were a long term holder. Nothing wrong with that. The only difference is your expense ratio is going to be a little bit higher when it comes to this ETF. So you have all other options like VOO or SPLG. They have smaller expense ratios, but what I would say is when it comes to getting out at a particular number you want to get out in, the SPY is going to be very good for that because a lot of traders use it. And if you want to get your money when you want to get it without playing any games, the SPY is a little more expensive, but you'll be able to get out when you want to. Okay. Now, let's go back and further our education here. So there are two. So there are here are the types of stock charts. So you have line charts, which is a single line showing the closing prices over time, which we'll show you that in just a second. You have bar charts, show open, high, low, and close for each period, and then you have candlestick charts, similar to bar charts with color coded candlesticks. Now, for me personally, I like the candlesticks, which is what you can see right here. These are the candlesticks. If you want to go with something like a line chart, this is what a line chart looks like. I'm not really the biggest fan of line charts, but hey, it is what it is. And then if you want to go with a bar chart, for example, this is an example of a bar chart really bland, but if you want more color, you have that option of doing that there. So it really depends on whatever tickles your fancy. Okay. Now let's go on to number three, understanding chart time frames. So you have intraday charts showing price movements within a single day. Okay. So this is what that looks like. So this is the intraday here. It will look something like that. Okay. So that's the intraday. Now I'm gonna change it back to the candles. If you want to look at something like a day, this is what the movement from a day looks like. So I'm gonna zoom in so you guys can see a little bit better. This would be an example of a day. So it's gonna show you the times leading throughout this particular day. Okay. If you want to go 5 days, you have the option of doing that too. And you can even go up to a year, or if you want to see everything, you can do that as well. So we're going to come back to our 5 minute chart here. So we're going to have to zoom in to get back to where we were. But yeah, you can play around with it and, suit whatever's going to fit whatever you're trying to accomplish. Okay. Now, when we talk about the key components of stock charts, you have price access, which is going to be your Y, which goes up and down, which displays the stock price. And then you have access X, which displays the time period over which the stock's price is tracked. And then you have volume bars at the bottom indicating the number of shares. So we don't, it looks like we do. So here's the volume bar here. So it shows you the volume activity. And now your Y is going to be up and down. So again, that's going to give you your price, okay? And then your X, which goes across as at the bottom here, you can see the time. Okay. So if the stock goes up, this is your Y. If it comes down, this is on your Y. So the Y is up and down, and the X is side to side. So time goes across, price goes up and down. Okay. So very important to know. Now, when it comes to volume, I want to touch on that. You can see at the bottom. So this is telling you what's going on. There was a lot of selling going on here, which is in red. And then you can see in the green, this is a lot of buying going on. And so these particular colors is letting you know what's going on by the specific time. And so since we are on a 5 minute time frame, each one of these lines represents a time frame. So this is 5 minutes, this is 5 minutes, so forth and so on. Now, you'll tend to notice, guys, when there's a lot of volatility in the markets. When I say volatility, that means there's a lot of activity, a lot of liquidity has come into the space, and it's volatile, right? And so, in this particular case, this probably was the most volatile moment of the day thus far. Although when I'm recording this is the day that the Fed Chair Powell is going to be speaking at Jackson Hole, which is going to cause for one of the most volatile days of this year. Okay. And so you have to be careful when it comes to volatility, and you have to understand these charts. Now, let's talk about the basic chart patterns. You have support and resistance. So these are key price levels where buying and selling interest is strong. So if we come back here, I'm going to use a line. You can see there, and we're going to do a line that's going to show us a level of resistance. Okay. So a level of resistance is an area you want to break through in order to go back to the upside. Okay. So if I put a line here, let me put one here. This is going to represent support. So as of right now, I would say we're below a key level of support. So you can see, according to history, we've bounced off this particular line of support here. So see, we haven't come underneath. That shows a level of support, a strong level of support. So right now, we're on the verge of breaking this key level of support, but we'll see how things plan out throughout the rest of this day. Okay. So support is the floor, right? Imagine the floor. This is support. And then the ceiling is going to be resistance. Okay. So we're going to go ahead and type this in for you. Resistance is a level that we want to break through. In this particular instance, if we were day trading, right? So for example, if we were momentum trading, for example, and you say, you know what, I want to make some money to the upside, you could play it off this level of support here and put a call in or buy a stock in hopes that it's going to ride up. But you want to make sure you put a stop loss on. But we'll talk about that a little bit later. So again, this line here is going to be called support. So support is your floor. Okay. This is your floor support. That's what this line represents. And now we're going to put another one called resistance. Okay. So resistance is your ceiling. This is the area you want to go beyond if you were going to be doing momentum trading. Now, for me, I'm more so a scalp trader when it comes to uh day trading. So I like to just get in. So right now would be a good opportunity for me to get in. I will put a little bit of my capital in, and as it goes up, the slightest bit of green that I like, I'm taking it. I'm not sitting there playing any games. I'm taking what the market gives me. Okay. Very important to know. Now, let's go ahead and continue with we need to talk about. So you have trend lines representing the general direction of a price movement, and then you have moving averages. You got the SMA, you got the EMA, and so let's talk about a trend line here. So if I wanted to create a trend line, you can see right here a trend line would look something like this. So the trend line is letting you know that the particular chart has movement going to the downside. Okay. So this is what a trend line would look like. Now, on the flip side, earlier today, our trend line would look something like this, showing you that the momentum will be going to the upside. Okay. And so this is very important when it comes to kind of forecasting the direction a particular stock can go. When you look at history, like for example, you can see we've created what they call a double top. Okay. Now it's not a perfect double top, but let me go ahead and type that in. You see this movement, it tries to break resistance, it gets rejected at 563. It tried it again and it got rejected. So typically what follows a double top is movement to the downside. In reverse, a double bottom could potentially show you that there's going to be movement to the upside. So for this particular illustration here, you have a double top. Again, it's not a perfect double top, but this is good to know. I'm going to type in double top. Very important to know, double top. And then what is it followed by typically? I'm going to put that in. Let me see. Well, it's not going to let me get in there, but let me see if it's going to let me type. Okay. So let me type this in for you. Typically followed by a downward trend. That's what usually happens with the double top. Okay. And that's what this is. Again, a double bottom is usually followed by an upward trend. So very important to know. Okay. Now, let's go ahead and move on to some of the uh, different topics that's going to help you with the charts here. All right, now let's talk about common technical indicators. So you've got the RSI, which measures speed and change of price movements, indicating overbought or oversold conditions. And so when we click here, if you click where it says indicator, and it's got this little squiggly line with the arrow, all right, you can see if I click RSI, you can see this is showing you the speed, right? So right now things have tend to have slowed down, but usually when there is spikes up, like especially at the open of the market opening up, you'll see something like this. Okay, now we're kind of slowing down, consolidating. We're actually waiting on the federal chairman Jerome Powell to speak right now, and I would assume this thing will spike back up. So that's a look at the way the RSI kind of works. Now the MACD, which shows the relationship between two moving averages, indicating trend changes. So if we want to look at the MACD, you would click there, and so you can see this is showing you on a 5 minute chart what's happened, how things transpired. So you can see there was some selling pressure. We went into some buying pressure. Then we came down. Then we had a huge spike up in the MACD, and now we're coming down, as you can see. So basically, it's kind of reversing what you see here on the chart of how things kind of turned out. But as of right now, there is a lot of selling pressure because the market is getting ready for what's to come in the next hour and a half or so. Big day ahead. Okay. So that's a look at the MACD and the RSI. For me personally, the way I trade, I typically don't look at those often, but on a day like today, I'll be keeping my eye out on them. But this is why you have to use little bit. Well, for me, the way I like to trade, I use little bit of capital at a time. That way, if I find myself in a bind, I can easily average myself out. Okay. So you may have a goal of, making 5, 10, 15, $20 a day, which in that case will prevent you from losing too much money. Okay, so you'll find that the greedier you are, the more money you'll tend to lead. You'll tend to lose. Which starting off as a beginner, you do not want to go into that direction. And this is why I'm gonna show you how to trade stocks first before you go into options. Very important. You don't want to jump straight into options, not even knowing how to trade stocks. Very important. Okay. Now, Bollinger Bands is the volatility indicator showing range within which the price is likely to trade. Okay. So if we go to our Bollinger Band here, you can see, all right, so we've got this is showing you the particular trend that it can go. So right now it's pointing still more towards the downside. And so yeah, you just practice around with these things and you'll figure it out, guys. Just get in and practice. Okay. Now, because I don't want to hold you guys very long, we're gonna go to number 7. So interpreting candlestick patterns. So you've got a doji, which indicates indecision. Opening and closing prices are nearly the same. Then you have a hammer, which is bullish reversal pattern suggesting a potential bottom. You've got the shooting star, which is bearish, which is a reversal pattern indicating a potential top. And then you've got the engulfing patterns, reversal patterns indicating a potential trend change. All right, so when we talk about a doji candle, for example, you see this plus sign here on this chart here. There's a plus symbol that's green. Okay, that is an example of a doji candle, right? And so that candle is showing you that the direction of the stock is about to change. And you can see this green candle was followed by a red candle. So this plus is an example of a doji candle. Okay, now a hammer candle would look something like this. Okay, so it's got the plus, but I'm sorry, this one here. So it's got a bigger plus. So hopefully you guys can see it. And then you see there's a line going there, which shows that the selling pressure tried, but it failed. And so ultimately, this is the hammer candle that led to the upward movement. So typically, a hammer candle is going to be followed by an explosive move to the upside. Now, same thing in reversal. If you see this in the red, there could potentially be downward pressure creating a red candle like this. So green is up, red is down. Very important to know. Now, a shooting star candle would look something like this. So it's kind of the reverse of the hammer candle, which was here. It's the reverse. So notice on the hammer, you got the line that's going down, but with the shooting star, the line is going to the top side, which is indicating there could be a potential move to the downside, which is usually that usually looks like this. So you've got the shooting star. Okay, that means it's failed to reach a new level, and there's more selling pressure coming, and then it's followed by this red candle comes directly behind it. Okay, now an engulfing bullish candle will look something like this. Okay. So you can see the line at the bottom and the line at the top are virtually even. And so this is an indication that we're going to get some movement to the upside. Okay. So again, you can see this engulfing candle here is followed by this hammer, and then we've got the explosion going to the upside. Again, another one that's very important to know. Okay, now you can use multiple indicators, of course. So confluence is combining indicators to confirm trading signals, and then you've got divergence, which is price moves in one direction, indicator moves in another, signaling potential reversals. Okay, now risk management and chart analysis. So stop loss orders, predetermined price to sell a stock, limiting losses, and then position sizing, determining capital to risk on a trade based on analysis. Now, when it comes to position and size, this is something that you're going to have to work to figure out. But for me, let's say if I had $20,000, I'm only going to use, let's say, $200 to $500 at a time in order to make a profit. Sometimes a little bit more, but sometimes a little bit less. So one thing you have to understand is patience when it comes to the market, and don't be in such a rush to get in and potentially lose your money and over leverage yourself. So you want to be strategic. You want to use little bits at a time, and then you want to use your stop loss. Now, when it comes to using a stop loss, for example, let's see if we have something here that I can show you guys. So let me bring this thing up. No, it's not here. So where So let's say I bought in, right? Let's say I bought in here. And so you can easily click that plus and do buy. And then you would click there. Now, if I wanted to sell, for example, creating a stop loss, let's say, you know what, I bought here. I expected it to go to 560, but to get ahead of the curve, I'm going to hover here and say I want to be stopped out at $557. So then you can go there and put a sale order at $557 and some change, and that would set you up to automatically be stopped out. So using a stop loss is very, very important. And you guys can see how easy it is to use on this particular platform. And this is the main reason why I'm using it, because it's simple and easy to use. Now, let's talk about practice and continuous learning. So, back testing, practicing chart reading on historical data, and then you have paper trading, simulating trades in real time to build an experience. Now, what I would say about paper trading, I would say number one, it is very inspiring to be able to go in and practice with large amounts of money. I think it's important to see where you could potentially be and how you could, practice with larger amounts of money, but also it gets you in that mental capacity where you put yourself in a position to excel. Not only that, you can practice before you actually use your money. And a lot of people like to practice before using their money. There are people that even practice a year or more before they actually get in. But I found for me, The only way that I really learned is using my own money. Even when I paper traded, it's for me, I learned a lot. But when it comes to dealing with your emotions, which play a role in this as well, there's nothing like playing with your own money. That's just keeping it all the way real. Now, back testing, practicing chart reading on historical charts. Again, we kind of simulated that today, where, and I'll go ahead and go a little bit in depth with this. So, for example, if we wanted to look at this thing, even on the 1 year chart, for example, and excuse all the blue lines here, but I need those for later. You can see history, right? So you can see if there was going to be a big drop in the market, like a recession, this could potentially tell you that, hey, we could come down to $474. If it's something that's really nasty, we could come down to maybe even 353. You just never know. And so even if I bring this thing back in a little bit to a quarter, right? It gives you access a little bit more information. It can let you know different levels we could come back and test. 521 is one of them. Another one would be 447. And so it's very important to look at these levels to potentially see the levels we could come back to. Okay. Now, let's go ahead and talk about the conclusion here. Now, reading stock charts is critical for traders and investors. Start with fundamentals and advance to more complex analysis as you gain experience. Okay. So overall, in the nutshell, guys, it's just gonna take a lot of practice, a lot of dedication, a lot of patience, persistence, hard work, blood, sweat, tears, maybe, and for a lot of you guys, but it's gonna be worth it in the end. The one thing I can say is once you've learned your lesson, yes, you may be put in a position where you're fighting to uh get over something that you've learned, but you want to keep trying it over and over again, and eventually it's going to stick. This is why I tell you guys to use little bits of money until you learn these lessons. Then you want to implement larger sums of cash, because you don't want to get yourself in a position where you're losing thousands of dollars at a time, not really understanding what's going on. Now, for me, I've been there, especially more so in the beginning. I've been there where I've lost thousands of dollars, but at the end of the day, I've discovered to stick to what works, to stick to um, um, little bits at a time, not being greedy, and ultimately, I've come to the point where I've excelled because I've got rid of that greed. Okay, listen, guys, I appreciate you guys. Keep your head up. Share this video, like the video, subscribe to the channel if you find this information useful. Until the next video, guys, we are out. Peace.